All right. Hello, everyone. Happy Monday. Welcome to your market check-in here with myself, Greta Baum, your host. I'm joined by Derrick Oldensmith, the head trader at T3 Trading Group and leader of T3 Live's Pro Desk virtual trading floor. Before we get into any market-related discussion, here's just a quick disclosure of Derrick's positions as of today, June 29th, 2026. Again, he is the head trader at T3 Trading Group. The title of our stream today, Derrick, is Summer Market Update, because you and I haven't talked since June 1st. So we're,
Wow.
A month into a lot here. Basically, a lot has happened over the past month. So a ton for us to touch on and review, etc. But first, how is your Monday going for you so far today?
It's going really well. I'm pretty bullish. So we're working our way through some market dynamics with like this pension fund rebalance that had made equities a little bit heavier, I think, over the course of last week. But I think it's been a dip to buy. And the SPYs are up 1.3% today. And as you just saw with the position disclosure, I've got like, I don't know, 16 longs on and one short. So SPY's up 1.25%, Q's up 2%. I guess the Russell's trading down 1%, but overall it's a pretty good day.
That one short you have on is SpaceX. And we haven't talked since the SpaceX IPO. So fill me in on what you think about the stock. Why are you short now? And, the end of this week, it's going to get included in the NASDAQ 100, get added to the NASDAQ 100, start trading as of Monday, June 7th, July 7th. My gosh, July 7th on the NASDAQ 100. So what do you think about SpaceX?
So SpaceX, I mean, I've been short from above 200, like 215 or something like that from the third day after the IPO. I shorted it a little bit on the IPO day, made a couple dollars, mainly got out of the way, swung a small amount of it, gave back some profit on that on day 2, which was the biggest update that SpaceX has had. Stopped myself out, and then on day 3, it gave like a parabolic up move on increasing volume that really accelerated to the upside, which was screaming short at that point. The valuation went beyond Microsoft and Amazon that day, which is just completely ridiculous for a company that's got 14 billion in revenue or something like that. And the technical setup was also there. So I shorted it, and I've been short since. It's basically making a bear flag right now in front of 150. Obviously, it's a recent issuance, and you should be getting some sort of a forced bid that's coming in from the NASDAQ edition. But this thing, in my opinion, is a ticking time bomb. In the short run here, it's probably going to give a lot of volatility. It could give a really big bounce. I don't think it's outside the realm of possibility for the bear flag that I just mentioned to actually break out to the upside, especially with the NASDAQ inclusion. But then what's going to happen is the lockup's going to hit, lockup expiration is going to hit, and the tradable float on this is just going to increase massively. That's the biggest issue with this. That's the reason how it's able to trade at the price and the valuation that it's able to trade at, is because the tradable float is just so small. In my opinion, this whole thing is like a borderline, I don't want to specifically use the word scam. It's not a scam, but this is a direct transfer of wealth from the insiders who have owned SpaceX for a long time to the retail people who haven't been able to get in on it, and they're just hyping the hell out of it and keeping the float short initially, so that when the lockups occur, those insiders who are in the money a lot can just dump their SpaceX into these poor, helpless retail people. So that creates an overbearing weight on this stock. But the first lockup expiration isn't until mid-August. I forget the exact date. That first expiration should more than double the tradable float. So things are going to get a lot heavier. And then from that point forward, they're having smaller expirations, I think, every 2 weeks for a pretty decent period of time. So you're just going to get so much more stock that's coming online. And at the end of the day, it's about supply and demand. So right now there's low supply. There's a lot of demand around the hype that's coming from retail, but the supply is going to increase. And if the demand stays the same, I won't be surprised at all to see SpaceX trading somewhere between $60 and $80, at some point between 6 months and a year and a half from now, which is a big down move. So I've done really well with it. I'm continuing to stick with that short. I'm continuing to ride it and work the position, and we'll see what happens. In the short run, it could certainly break up, but in the long run, I think this thing's a little bit of a ticking time bomb. And don't get me wrong, before the haters jump in on my commentary here, a lot of SpaceX is a great company. I love to hate on Tesla. I love to hate on Elon Musk, but we got to keep it real here. Starlink is a phenomenal company. It really is. And the SpaceX business is also a great company. The problem is that they're trying to bring in all of these other businesses, many of them that aren't as successful, and they're making the valuation, I think, just off of the AI business. They're saying like it's a $28 trillion addressable market, and that they're expecting to be able to capture a large percentage of it in order to be able to justify this valuation. I mean, that's just ridiculous. It's just completely ridiculous. So you got a great company in there, but not at this price, not at this valuation.
All right. I want to talk about this week. It is obviously a short week. The 4th of July holiday falls on Saturday, so Friday, and the market is closed in observance of that. So only 4 trading days, and that means an early NFP. Also, Thursday, the NFP will be out instead of coming out on Friday. Any other catalysts besides the jobs report and the other jobs data that we're going to get this week that you're focused on?
There's no news catalysts. I'm really paying close attention to some market dynamics and some seasonality right now. So I mentioned it really briefly. Into the end of June, the end of the first half of the year, we're expecting a very large pension rebalance that is selling equities and buying treasuries. This is well known and well telegraphed. So I think that we're at the point where most of that actually should be priced into the market at this point. So I think the strength that you're seeing from the market today, which I expect can carry into tomorrow, is actually a little bit of a front running of strength in July. So July is typically a very strong month from a seasonal perspective, especially the first half of it. The day before the 4th of July holiday, so for this year, that's this coming Thursday, tends to be, I mean, from a seasonal perspective, it is the strongest day of the calendar year. Now, just because something happens in the past does not mean that it has to happen in the future. There's always going to be different nuances, but I am generally expecting, now that we've seen June be a corrective month for the market, and we saw last week the market was really heavy, which I attribute to the pension sell rebalance. I think that that's going to then give way to a really strong July, especially first half of July, as that bullish seasonality comes into play. It's especially true when you've already had a strong year up until that point, and we have had a strong year. So all of those gains in the stock market can actually act as like additional collateral as you get into the second half of the year for more money to go into the market. It's kind of like a mechanism that feeds upon itself. And as any trader knows, that's how markets work. Markets work in feedback cycles. Buying leads to more buying, and selling leads to more selling. We just got to get through this June corrective period and this pension sell rebalance, and then I think that things are just going to become increasingly more bullish. And I am also just still looking for a little further technical confirmation. I really want to see SPY back above 740, which it's tested again today, but still held as resistance. So SPY above 740 and Qs above 723, and the technicals will begin to confirm, I think, the July strength. So I'm very focused on market dynamics and seasonality, like I always am, and we'll see if we get any news catalysts, between Iran and inflation numbers and jobs numbers. There's always something coming out that can move us a little bit, so you have to be prepared for that.
I was going to ask this. This jobs report will be the first one since Warsh took over at the Fed. We got his first decision and press conference and all of that earlier this month. So do you think the market, I mean, obviously the jobs numbers always matter. If it's really bad, it's going to affect something. If it's really good, it's going to affect something that's in line. I feel like it doesn't really matter. Do you think this is any different than any other jobs report this Thursday?
The jobs numbers are important right now just because they can't be deteriorating. But if they continue to hold in, which is what I expect that they will, then it's a little bit of a non-event, because really what matters right now, what's really important in this market is I think more the inflation side of the mandate. It is without a doubt to me that inflation is too high, but I also think that the market is overpricing the probability of hikes. We've started to see the market actually price in hikes for this year. Bank of America came out, I don't want to misquote it, but Bank of America came out a week ago, and I think they said that they're expecting 3 hikes this year. It sounds so incorrect to me that it like, I feel like I'm misquoting them, and maybe I am, but I do not think that the Fed is going to increase interest rates. Should they? Probably. Inflation is way too high. We have a problem. Will they? No. We just put Warsh in as the head of the Federal Reserve. It's Trump's guy, and he's literally talking about changing the way that we measure inflation. And the reason why he wants to do that is to hopefully have ammo to be able to cut it at a certain point, or at least to be able to keep interest rates the same while inflation is too high. So it's a problem. It's something that I disagree with. I actually think that we should be leaning towards hiking, but it's not going to happen. They want to run this market high. Higher prices for everything means higher prices for the stock market. So as long as you own stocks, as long as you have a 401k, that's your inflation hedge. Because, you know, if we're not increasing interest rates, which does dampen the market, if you want to run everything hot, if you want to keep interest rates lower than they probably should be, allow inflation to persist, that's going to be that's actually bullish for the stock market. And that then turns into a conversation about this concept of a K-shaped economy. If you're wealthy enough to own assets and own stocks, honestly, inflation it's frustrating to, you know, whatever, go to the grocery store or whatever and see those higher prices, but all of your assets are worth more. The problem is for the people who don't own any assets. When they go to the grocery store, their income levels are staying the same, but prices keep going higher. But you know, who cares about those people?
All right. So when you look back on June, you went through a little bit of it, but let's talk about your own trading and what you did in the month of June and how you think you navigated the market and what was happening in June.
Yeah, so I've been really happy with my performance in June, especially considering that it's kind of a choppier month, and some traders would probably correctly argue that it's been a little bit of a tricky month. I think that we did a really good job calling out the lows in the market and looking for the dip buying opportunities. I think that we've done a really good job of focusing on relative strength and relative weakness. And by we, I mean me and the team of traders that I work with over here on the pro desk. So consistently being long semiconductors on every micro dip, buying SMH on every micro dip has just continued to pay. And then selectively at the right times, owning some things like software for bounce back trades, and getting a little bit more aggressive in some of the software stuff at the very end of last week, with an expectation around hedge fund window dressing into the end of the quarter, where they can't really own the underperforming assets, but then kind of rebuy them as you get into the second half of the year, has also, you know, worked out really well. So yeah, I mean, there's just been a bunch of really good calls. You know, I'm long, like, I don't know, 16, 17 positions. You got that one short, but a lot of what I'm in is breaking out. It's trading really well, like SoFi, and it can go through this 18. The cybersecurity stuff, we're looking at the CIBR. I'm not in CIBR directly, but I've got other cyber exposure, cybersecurity exposure. We were looking for this thing to break out. It broke out today. Josh over here on the team had called out Rocket like a few trading sessions ago. That's been a great trade. I'm still in it. It's continuing to pay. So just I think really good read on the market over the course of June, even if it's overall been pretty choppy, and it's been a good month.
Earnings season is pretty much over. There's like a couple of reports this week, one being Nike tomorrow after the market close. I think that's probably your biggest report of the week. General Mills, like some, you know, consumer stuff. But what do you think about this earnings season? Did it surprise you at all?
No. Earnings season really met my expectations. We have this concept that we talk. So first of all, every situation is always unique, but I have this general concept that I talk about all the time, and I've spoken to you about it, where if stock goes up a lot into the earnings report, it doesn't necessarily make me bearish, but I'm recognizing that because it went up a lot into the report, that the bar is going to be very high for it, and therefore a good report can sometimes be not good enough to get a stock to continue when it's already been up a lot. And the opposite is true on the downside. But for this earnings season, I actually did not think that that was going to be the case. And again, every situation is unique, and you always have to assess all of the factors. And that was just because as we were coming into the last earnings season. I mean, the next earnings season is about to be starting soon. When we're coming into the last earnings season, the market was at highs coming off of the March low, but all the data that I was looking at showed that the market and stocks were very underowned. So even though they were at highs and a lot of things had been given really big moves to the upside, it looked like we were able to continue because things were underowned. And that's exactly how it played out. And so many of these reports were incredible. I mean, the most recent one was Micron, which was the really important one. I think that things are maybe starting to change a little bit where now everything is much more well owned. But that Micron report a few trading sessions ago was phenomenal. I mean, phenomenal. And we can already see that Micron's potentially making another big pivot low on its daily chart today, depending on how it closes. So there's just no stopping some of these companies at this point. At some point, the jig will be up when it comes to AI CapEx spend, and we'll assess what the return on that looks like. And if it ever slows down, they'll spend less. And that becomes kind of the end of the cycle of these memory names and these chip names just trading the way that they have. That will happen at some point. I don't think we're there yet.
All right. Anything else? Any ideas or anything you want to add here at the end, Derek, or thoughts?
Yeah. So the biggest thing is that I am still bullish, right? I want this technical confirmation. I want SPYs above 740. A lot of the stuff that I was really looking at for continuation triggered. Again, like the CIBR, I was really looking for that to go, and it broke out today. CrowdStrike through 700, I was really looking for that to go. Gapped above 700, gap and go, beautiful gap and go in that today. I think that we're going to get, this is a hard call out. Really, software names are in the spot where you should be booking profit now, not buying. But I think that they're actually going to give more to the upside. So I like the idea, generally speaking, if you can get good execution prices, of being long both semiconductors and software right now, which a lot of times those have been trading opposite of one another. But I think that you can own both of them. They'll still continue to have a dynamic where, like, for example, today, especially this morning, semiconductors were weak and software was really strong. And that flipped a little bit when the semiconductors bottomed out around, I don't know, 10:15, 10:30. You'll still continue to get this interplay of relative strength and relative weakness between them. But I think that you can own both. I've also consistently been calling for, and will still call for, XLE long versus USO short as a pairs trade, because I think that XLE will continue to outperform the price of oil. Something you can look at. Like, some of the banks look great. Honestly, they could use a little bit of a breather because they've already gone a bit. Like the KRE ETF, the regional banking ETF, something you can look at. The XLF is something we can pay attention to if we can clear above 54. That'll start looking really good as well. So, yeah, I mean, everything I'm talking about still alongside. I'm generally bullish. Everything I'm in is long, with the exception of SpaceX, and it's going to continue to be that way.
All right. If anyone is interested in working with Derek, you can go to t3live.com/DOLive, fill out that survey there, and someone from his team will get in touch with you. Again, Derek is the head trader at T3 Trading Group. So if you join the prop team there, you work with Derek every single day on a daily basis inside his ProDesk virtual trading floor. That's where all the prop traders with T3 Trading Group are together. Derek, have a great end of your June. Good start to your July, and you and I will catch up next week after the long weekend. Have a good one.
Sounds good, Greta. Have a great holiday, and I'll talk to you soon.
All right, bye.